Joining us now live from this Milken conference with his outlook for the sector is Bank of New York Mellon President and CEO Robin Vince. Good morning. We're lucky to have a bank CEO on with this deal news. Welcome.
Thank you, Sarah. It's great to be here at the Milken conference with you.
So how do you feel about the banking system this morning?
Well, I think the banking system is very strong. We feel very good about it. I mean, resilience is so important for the U.S. economy, and a resilient banking system is critical for that as well. And we're proud to have played our role in that whole process as the world's largest custodian, as a provider of so many pieces of infrastructure across the banking system, and as one of the banks that helped stabilize the situation originally with the deposit into First Republic.
You're talking about the $30 billion that was deposited.
That's
David
right.
Reminded me March 16th to try to prop things up. That didn't work. Now you'll get that money back in this deal.
Well, we will get the money back, but I actually think it did work. I think it was extremely helpful in creating a path to what's ultimately happened. But, you know, as you said from the outset, the situation has now calmed down, and that's really what our clients wanted, and what I think all of the U.S. economy needed was to put this thing behind us.
What do you make of this deal with J.P. Morgan and the FDIC? Who got a good deal? JPM, the government?
Look, I think at the end of the day, I think all participants in the U.S. banking system got a good deal, because putting this chapter behind us and making sure that we can look forward and make sure that we're all focused on helping grow the U.S. economy and deal with some of the other issues that exist around the world, I think that's really the key thing. And we were proud to play the role that we played. And as America's oldest bank, and playing the role that we play in global capital markets with all of our significant platforms, it was important to us to play that role. We felt a responsibility to the system to originally participate with the 10 other banks in making that deposit, and I'm glad that it's worked out well.
Do you see or expect more bank failures in this country?
So I think this chapter is really behind us. It's a very, very different situation, as many commentators point out, compared to 2008. And so, you know, we'll have to see what happens in terms of the path of rates. We've been focused with our clients on helping them to navigate the situation. But I think one of the lessons that we've all learned from what's happened over the course of the past couple of months is that resilience is a commercial asset. And so focusing on resilience, whether for us, it's the resilience of our platforms. We provide critical services to the U.S. Treasury market. We provide payment services around the world. Those things are critical, but so is having a resilient balance sheet. And you don't get to be 239 years old unless you've actually focused on that.
So you touch 20% of investable assets around the world, which I mentioned is huge. What are you seeing right now in the wake of some of these bank failures and the stress in the system?
Well, look, our clients are telling us that they're seeing a little bit of a slowdown in a variety of different aspects of the U.S. economy. But when I speak to clients from outside of the U.S., it's very interesting how important the U.S. Markets are to them, whether it's to be able to raise capital, whether it's to be able to put capital to work. There's a real sense of the medium long-term vibrancy of the U.S. as a result of energy independence, as a result of the innovation that we have here in the U.S. And it's interesting how around the world that message really has carried out.
Really, it's interesting considering we've seen outperformance in places like Europe this year, because the part of the problem on the banks was in the United States. There's a lot of noise when it comes to the rate rises and what's happening with the economy.
Well, look, I think if you step back from the U.S. banking system in the U.S., you see an incredibly strong system here. You see all of the capital that's been added to the system, the liquidity that's been added to the system. We're one of the 8 G-SIB banks in the United States. I think we've seen the benefit of having very, very strong big banks in the United States.